you might have a special tax loss harvesting opportunity at the end of 2022. Hi, this is financial planner Sean Mullaney. Let's discuss. So 2022's had a lot of lemons, particularly in the stock and bond markets, right? We've got a lot of built-in losses out there in the world. And for those folks who have built-in losses in taxable accounts, particularly when it comes to bonds and bond funds, 2022 might be the year to do some great tax loss harvesting. So let's think about a bond or a bond fund, right? It pays interest income, usually monthly, maybe quarterly, maybe annually. Okay, well, from a tax perspective, that's not so good. Why? One, you're creating ordinary income. It's taxed at the highest marginal rate that the taxpayer is subject to. And oh, by the way, it might be subject to that 3.8% net investment income tax that goes for Medicare, right? So depending on our other income, that could be a really bad outcome. And typically speaking, right, your mileage might vary. Bonds and bond funds tend to have higher income yields than equities and equity funds, right? So in a taxable account, a bond can be sort of leaky, right? So from a tax basketing perspective, where might we want to hold our bonds? Maybe in like a 401k or a traditional IRA where the income is going to be ordinary income anyway, right? We defer it and we can have some control. Yeah, there are RMDs starting at age 72, but we at least have some control there on the timing of that income. So that's sort of where bonds and bond funds naturally reside in terms of tax optimization. Well, perhaps you are sitting on some taxable bond investments. And maybe you've got a built-in loss because it's the year 2022 and who doesn't have a built-in loss, right? Maybe now is a time to get two benefits for one particular restructuring, right? So what you could do is sell that taxable bond fund and maybe reallocate in the taxable account into a desired investment, maybe an equity investment that's lower yield and gets qualified dividend income, right? And then maybe in a 401k or traditional IRA, you do the flip. So you don't change your overall investment allocation. If you don't want to change your overall investment allocation, maybe this is something you do. Look to your own situation, look to your own advisors. This is just an educational video, but it's bringing up a potential opportunity if you hold bonds in a taxable account, right? What you could do is sell the bond in the taxable account, claim the loss on the tax return, and now you're out of those bonds in the taxable account, so you're lowering future interest income, and maybe in the taxable account, you replace the bond holding with an equity holding, so that in the future, that creates dividend income that hopefully mostly qualifies for qualified dividend income, and will then have a lower tax rate. And oh, by the way, is probably going to be a lower yield in most years anyway. So we're both reducing the number in terms of our adjusted gross income, and we're now biasing in our taxable account towards preferred income. And oh, by the way, we're doing some tax loss harvesting, right? If we rebuy bonds in our 401k or traditional IRA, we got to navigate that wash sale rule. But even if we tripped it and we just can't use that loss, maybe we're better from a tax basketing perspective anyway, and maybe we haven't even changed our overall investment allocation. So this is a special opportunity for 2022. We just haven't had big losses in bond funds in recent years until 2022. So hey, 2022 gives you some lemons. This is an opportunity to make some lemonade. I've linked in the description below a blog post that goes into this concept from an educational perspective in a lot more detail. Hope you liked this video. If you did, please mash that like button and subscribe to my channel. I'll see you next time.